Welcome back. Today, we are conducting a professional deep dive into the fourth quarter 2025 financial performance of Morgan Stanley. We will examine the bank's revenue growth, capital strength, and the performance of its wealth and investment management divisions. Before we get into the charts, please like this video and subscribe to our channel for more institutional grade financial analysis. Let's begin. We begin with the current market standing of Morgan Stanley, trading under the ticker MS on the New York Stock Exchange. As of the close on March 20th, 2026, Morgan Stanley's stock was priced at $161.47, showing a strong increase of 1.84%. As a global leader in investment banking and wealth management, Morgan Stanley's performance is often seen as a barometer for the broader financial services sector. The company has navigated a complex interest rate environment throughout 2025, and this current valuation reflects investor confidence in its diversified business model and its ability to generate fee-based income even during market volatility. This baseline pricing sets the stage for our detailed analysis of the bank's valuation multiples, profitability trends, and segment performance. Throughout this video, we will dissect the technical data to provide a comprehensive view of Morgan Stanley's financial health at the end of the 2025 fiscal year and what investors should expect heading into 2026. Next, we analyze Morgan Stanley's valuation ratios, which provide critical context for the stock's current price. The price-to-earnings ratio currently stands at 15.54, while the price-to-sales ratio is at 2.10. We also observe a price-to-book ratio of 2.46 and a price-to-cash flow ratio of 5.13. Looking at the trend since early 2024, the P/E ratio has seen some fluctuation, dipping toward 13.69 in early 2025 before recovering to its current levels. This suggests that the market is now assigning a higher multiple to the bank's earnings as the economic outlook clarifies. The price-to-book ratio of nearly 2.5 is particularly noteworthy for a major bank, indicating that investors are valuing the company significantly above its accounting book value, likely due to the high-return nature of its wealth management business. These ratios are essential for comparing Morgan Stanley against its peer group, including Goldman Sachs and JP Morgan Chase, helping analysts determine if the stock is trading at a premium or a discount relative to its historical averages and industry benchmarks. Turning to the income statement for the fourth quarter of 2025, Morgan Stanley generated total revenue of $30.00 billion. While this is a slight 3.87% decrease from the previous quarter, net income remained strong at $4.40 billion. The chart highlights the significant role of interest income, which contributed $14.95 billion to the total revenue. This data demonstrates the bank's ability to maintain high levels of profitability even as top-line figures experience normal quarterly variations. The net interest income trend over the past 2 years shows a company that has successfully adapted to changing rate environments, optimizing its lending and deposit strategies. For investors, the consistency in net income, which has grown from $1.8 billion in early 2024 to the current $4.4 billion, is a powerful indicator of operational efficiency and strategic growth. Observing these trends help us understand how Morgan Stanley is balancing its diverse revenue streams to ensure a resilient profit base across its various business cycles. The balance sheet provides a snapshot of Morgan Stanley's immense financial scale. As of the fourth quarter of 2025, total assets reached a staggering $1.42 trillion, representing a 4.28% increase compared to the third quarter. Concurrently, total liabilities increased by 4.54%, reaching $1.31 trillion. This growth in the balance sheet reflects the bank's expanding activities in global markets and its increasing assets under management. Total equity also grew to $112.65 billion, up nearly 7% year over year. The ratio of assets to liabilities is a key indicator of the bank's leverage and capital adequacy. Despite the trillion-dollar scale, Morgan Stanley maintains a robust equity cushion, which is vital for meeting regulatory requirements and ensuring stability during periods of market stress. For long-term investors, the focus is on how efficiently the bank is deploying this massive asset base to generate returns for shareholders while maintaining a conservative risk profile in its core lending and trading operations. Cash flow analysis is essential for understanding the liquidity dynamics of a major financial institution. In Q4 2025, cash from operating activities was $8.40 billion. This was offset by a significant outflow of $42.60 billion in investing activities, which is common for banks as they rotate portfolios and deploy capital. Financing activities saw a net inflow of $42.37 billion, largely due to debt issuance and deposit growth. The resulting free cash flow for the quarter was a healthy $7.69 billion. For the full year 2025, Morgan Stanley generated $49.00 billion in operating cash flow, with a total annual free cash flow of $46.10 billion. These robust figures underscore the bank's exceptional ability to generate actual cash from its operations, providing the necessary liquidity to fund its dividend, engage in share buybacks, and reinvest in its technological infrastructure. This consistent cash generation is a hallmark of Morgan Stanley's financial strength and a key reason for its premium valuation in the banking sector. For income-focused investors, Morgan Stanley's dividend policy remains highly attractive. The bank currently pays a quarterly dividend of $1 per share, resulting in a trailing 12-month dividend yield of 2.43%. The chart shows a clear upward trajectory in dividends per share, which have grown from $1.30 annually in 2012 to nearly $4 today. The payout ratio for 2025 is a sustainable 37.72%, indicating that the bank has ample room to continue its dividend growth. Investors should note the last ex-dividend date of January 30th, 2026. The consistent growth in payouts, even through various market cycles, reflects management's commitment to returning capital to shareholders and their confidence in the long-term stability of the bank's earnings. This combination of a competitive yield and a history of double-digit growth makes Morgan Stanley a core holding for many dividend-oriented portfolios, especially given the strong cash flow support we analyzed in the previous segment. Reviewing the latest financial highlights, Morgan Stanley reported an earnings per share of $2.68 for the last quarter, significantly beating the analyst estimate of $2.43 by 10.39%. Revenue for the same period was $17.89 billion, slightly above the estimated $17.74 billion. Looking ahead to the first quarter of 2026, analysts are projecting a further increase in earnings to $2.97 per share, with expected revenue rising to $19.43 billion. The significant beat in the most recent quarter is a testament to the bank's operational momentum, particularly in its trading and advisory businesses. While the forward-looking guidance is ambitious, Morgan Stanley's history of consistent outperformance, with surprises ranging from 7% to over 33%, provides a positive backdrop for investors. Monitoring these reporting cycles is essential for understanding how the market's high expectations are being met by the bank's actual performance. The revenue trend analysis over the past several quarters reveals a consistent story of growth and positive market surprises. Starting from $15.14 billion in early 2024, quarterly revenue has steadily climbed, reaching $17.89 billion in the latest reported period. Even more telling is the bank's ability to consistently beat analyst estimates, with surprises reaching as high as 9.20% in mid-2025. This pattern of overperformance suggests that the market often underestimates Morgan Stanley's ability to generate revenue across its diverse platforms. The forecast through 2026 shows continued expectation of high revenue, with projections hitting nearly $20 billion per quarter by the end of next year. For any investor, this pattern of accelerating revenue, combined with frequent technical beats, is a strong indicator of a company with high operational leverage and a dominant market position. These trends provide a solid foundation for future growth, even as the global financial landscape continues to evolve. Morgan Stanley's revenue is highly diversified across its core business segments. The Institutional Securities division is the largest contributor, generating $33.08 billion last year, up from $28 billion the year before. Wealth management followed closely with $31.75 billion, while investment management added $6.53 billion. This balanced contribution between institutional trading and fee-based wealth management is a key strategic advantage for the bank, as it provides a stable revenue base that is less sensitive to market volatility. Geographically, the Americas remain the dominant market, accounting for $52.90 billion in revenue. Understanding this segment breakdown is key to assessing Morgan Stanley's overall valuation and its ability to continue leading the global financial services industry. The strong growth in wealth management in particular provides a recurring revenue stream that supports the bank's high valuation multiples and its ability to sustain a growing dividend over the long term. Finally, we analyze Morgan Stanley's revenue by geography. The Americas continue to be the primary driver of growth, with revenue increasing from $30 billion in 2019 to over $52 billion in 2025. The EMEA region also shows steady contributions, reaching $8.33 billion, while Asia added $9.42 billion. This global footprint allows Morgan Stanley to capture growth opportunities across different economic regions and regulatory environments. The significant dominance of the Americas highlights the bank's success in its home market, particularly in the high-growth wealth management sector. As the company continues to expand its global reach, these international contributions will become increasingly important indicators of its ability to scale its business model globally. For investors, this regional diversification mitigates the risk associated with any single market and provides multiple paths for long-term expansion. The steady upward trajectory across all major territories confirms Morgan Stanley's status as a truly global financial powerhouse. That concludes our professional financial report on Morgan Stanley for the fourth quarter of 2025. From the trillion-dollar balance sheet to the record-breaking earnings beats, the data reveals a bank that is operating with high efficiency and strategic clarity. If you found this data-driven analysis helpful, please hit the like button and share your thoughts on the future of financial services in the comments below. Don't forget to subscribe for more technical financial insights. Thanks for watching, and we'll see you in the next analysis.